What if I told you the most powerful app on your phone isn't an app at all? It's the US dollar? Have you ever wondered why oil in the Middle East, chips in Taiwan, and coffee beans in Brazil all seem to settle in greenbacks? Did you know the dollar shows up on one side of almost every foreign exchange trade? Kinda wild, right? Now here's the twist. You've probably heard the buzzword de-dollarization. Countries setting up swap lines, talking new currencies, pricing a little oil in Yuan, building new payment rails. Yeah, it sounds like the world might be packing its bags, but is it really moving out or just rearranging the furniture? If you've ever switched your phone's default keyboard and, instantly regretted it, you already get how sticky defaults can be. Money has defaults too. So let's dig in. Curiously, honestly, no doom, no cheerleading. By the end, you'll know what's real, what's hype, and what to actually watch. Cool? Let's go. What the dollar does, why people want options. Okay, quick story time. The dollar isn't just paper or pixels. It's an operating system for global trade and finance. The world uses it because it's liquid. You can buy and sell dollars at almost any hour, almost anywhere. No awkward, sorry, market's closed moments. It has a deep, safe asset pool. US treasuries are like the world's savings account, huge, tradable, and easy to value. Not perfect, but dependable. It's the language of prices. Commodities, shipping, aircraft, a lot of global invoices, dollar, dollar, dollar. Habit meets convenience. It plugs into global plumbing, banks, clearing systems, hedging markets, legal contracts, all wired for dollars. The pipes already fit. So why does de-dollarization even come up? A few reasons, and yeah, some are emotional, some are practical. Sanctions and geopolitics. When the US uses the dollar network to enforce foreign policy, countries think, maybe we need a backup plan. Rising powers. China wants more trade in yuan. Others want more control, more autonomy. It's not anti-dollar as much as pro-option. Fear of US debt and inflation. People look at big deficits and wonder how this story ends. Fair question, even if the answer isn't simple. Tech is changing the rails. New payment systems, CBDCs, stablecoins, suddenly there are more ways to move value. Now, how much change have we actually seen? Let's keep it grounded. Reserves. The dollar's share of global FX reserves has edged down over the years, but it's still the biggest by a mile. Think less dominant, not disappeared. Trade invoicing. Outside of Europe, a lot of trade still gets priced in dollars. Even when two non-US countries trade with each other, the invoice often says USD. Habit is powerful. FX trading. The dollar shows up in the vast majority of trades. It's the bridge currency, the connector between everything else. Payment messaging. Alternative systems are growing, sure, but the dollar networks remain the highway. New roads exist, but the main interstate is still busy. Where is change most visible? Russia and China have shifted more trade into yuan after sanctions. That's real. Some commodities deals, small but symbolic, have tried non-dollar pricing. It's more headline than volume right now, but it's not nothing. Central banks are nibbling at diversification. A bit more gold here, a bit more non-dollar currency there. Slow, deliberate, cautious. Here's the sticky point, and it matters. Replacing a currency isn't just replacing a symbol. You need deep bond markets, predictable laws, political stability, hedging tools, reliable custody, transparent data, and trust that survives a storm. The dollar's biggest moat isn't patriotism, it's plumbing. The ecosystem is huge. Switching the default is hard. That said, there's a difference between can't be replaced and can't be rebalanced. The world is clearly building options, backup pipes, regional loops, and honestly, that's healthy. Nobody wants a single point of failure in their financial life, right? You wouldn't keep every password the same. Same idea. Let's get practical. Why might a country want less dollar exposure? To reduce sanction risk. If a bad political day cuts you off from dollar clearing, that's a brutal day. To match trade to currency. If you buy a lot from China, paying in Yuan might smooth things, no double conversions, fewer FX shimmies. To signal independence. Some of this is brand building, fair enough. But why do so many keep coming back to dollars anyway? The treasury market is massive, easy in, easy out. Imagine trying to sell $1 billion in bonds before lunch in a smaller market. Good luck. Rule of law, contract enforcement, transparency. Again, not perfect, but predictable. Predictable is priceless in a panic. Network effects. Everyone already uses it, so everyone keeps using it. Like that group chat that decides the lunch spot forever. So is de-dollarization real? Yes, as a trend toward choice. No, as a sudden flip-the-switch moment. Think remix, not revolution. And yeah, that nuance is less sexy than a headline, but it's how money usually moves. Quietly, then suddenly, and then quietly again. Scenarios, signals, and what it means for you. All right, let's map the next decade. Not predictions, more like weather patterns. Bring an umbrella when the clouds look weird. Scenario 1. Slow diversification. Dollar still anchors. This is the base case. More bilateral trade in local currencies. More regional payment rails. Central banks add a sprinkle of non-dollar reserves and a bit more gold. The dollar remains the primary safe haven and the dominant invoice currency. It loses a little share, but it keeps the steering wheel in a storm. What this feels like? Headlines every few months about a new deal in Yuan or rupees or euros. Volume still mostly in dollars. Markets shrug. Who wins? Countries with strong institutions that can offer credible alternatives. Also users who learn to arbitrage multiple rails, cheaper, faster, smarter payments. Risks. Fragmentation adds friction. Hedging gets a bit messier. You might pay a few more basis points to cover that complexity. Scenario 2. Shock-driven shift. Faster than expected. This one happens if something breaks big. Think a major sanctions escalation, a crisis of confidence in US fiscal policy, or a market seizure that makes people ask, is there a plan B? What this feels like. Sudden bursts of local currency trade, more gold buying, louder BRICS chatter, and a noticeable move into non-dollar assets. Not a collapse, but a sharper step down in dollar share. Who wins? Countries with ready-to-go systems, deep bond markets, credible central banks, and working cross-border pipes. Also, commodity exporters who can price flexibly. Risks. Transition costs spike, spreads widen. Some borrowers find funding tougher. Volatility says, "Hi," loudly. Scenario 3. Tech rewires the rails. Here the theme is plumbing, not flags. Stable coins, tokenized treasuries, instant settlement across borders, CBDCs stitching into private networks. Irony alert, dollar stablecoins might actually extend the dollar's reach, even as new rails reduce dependence on legacy banks. What this feels like? Faster, cheaper payments, more 24/7 markets, fewer intermediaries. The badge on your wallet changes, but the unit inside could still be dollars. Who wins? Developers, fintechs, and countries that embrace open standards. Also, regular people who just want payments that don't feel like dial-up internet. Risks. Regulatory patchwork, fraud traps, and that awkward phase when new pipes leak. Early days are never clean. Ha ha ha. Bring towels. What to watch? A simple dashboard. Reserve composition. Are central banks steadily trimming dollar share or just nibbling? Trends matter more than one-off headlines. Trade invoicing. Watch how Asia prices trade with Asia. If intra-Asia trade moves away from dollars, that's meaningful. FX turnover. The dollar's share in global FX trading is the heartbeat. If that dips meaningfully, okay, now we're talking. Payment rails, growth in alternative messaging and settlement systems. Are they pilot projects or real pipes with volume? Safe asset depth. Can anyone else offer the world a giant, liquid, crisis-tested bond market? If yes, that's a seismic shift. If no, the dollar keeps the crown by default. Sanctions use. More weaponization equals more incentive to diversify. Less pressure means slower change. What it means for investors and businesses. Borrowers. If you borrow in dollars and earn in something else, match your risks. Currency mismatches are where good stories go bad. Hedgers. Expect more basis quirks. More currencies in play means more cracks where spreads can widen. Portfolios. Diversification isn't disloyalty, it's hygiene. A bit of non-dollar exposure can be a seatbelt, not a statement. Commodities. Pricing could get noisier. If invoicing fragments, hedging might cost a touch more. Build it into your math. Tech rails. Keep an eye on stablecoins, tokenized cash, and instant settlement. Even if you never touch crypto, the speed and cost gains are coming to the mainstream. What it means for regular folks, travel and shopping. The dollar's strength or weakness shows up in flight prices and imported goods. You'll feel it in your cart, not just in charts. Jobs and businesses, exporters, importers, logistics, everyone tied to global trade will adjust their hedges and maybe their suppliers. Expect small, gradual changes, not overnight drama. Safety mindset, emergency cash, low leverage, diversified savings. Boring, yes. Effective, also yes. Big picture, no spin. Calling de-dollarization a done deal is premature. Calling it fake is wrong too. The honest take is that the world is experimenting. It's building redundancy and a bit of regional independence while still leaning on the dollar when the weather turns ugly. The dollar is moving from only default to first among defaults. Not as catchy, but closer to the truth. One last thought. Money runs on trust, earned over years, tested in minutes. If the US keeps offering deep, transparent markets and credible policy, the dollar stays central. If others build strong, open alternatives, the world gets more options. That's not a war, that's progress. Options make systems safer. Hit subscribe and like for more clear, human explainers on the money system.